Hello everybody and welcome to another amazing video of DIY investing. Bitcoin and the rest of the altcoins are seeing downside. This is what I talked about in my last couple videos, analyzing why I believe that we're most likely going to be in for a deeper correction and how to go about profiting off that correction when it happens. For today's video, I'm going to be brushing up on some of the same points. We're going to go into a deep dive of the shorter time frames of Bitcoin and Ethereum so that we know exactly how to play this next correction that's coming. And then I'm going to be finishing it up by talking about one of the very best performing altcoins over the last couple months that's up over 2.5x since I gave the word about it just a few months ago. Thank you guys so much for tuning in, and with that being said, let's jump right into it today. Alrighty guys, now here we are to start off today's video. We're going to be diving into the shorter time frames of Bitcoin and giving you guys an idea of what I think is going to be happening from here. Now you guys already know in my last video, we were all the way up here and looked like we were potentially going to be breaking out. And I continue to stick to my analysis that basically said that we're most likely not going to end up breaking out of the range highs from August at 25,000. We're probably going to end up starting a deeper correction back down. And from that point, the market has sold off. We weren't actually able to hold support above here. And now the market's looking even more weak. And if we come down here and look at it, it looks to me like we're consolidating within this channel, which is once again something that's going to happen when you're looking at corrective type of sequences. This to me looks like some rough example of an ABC correction, and once we actually break down from this, in my opinion, that's going to set us up for a much bigger drop all the way back down to the range lows that we were at right before we rallied upwards into the August highs, which price-wise is going to be about $21,500. And I think it's likely that that's the area that we're headed next. You know, after this point, once we come back down here, I do believe that we would actually source enough liquidity to have some type of a bounce. You know, we might see an ABC back all the way back up to retest some of these range highs that were set here over in our wave 3 high. So if you guys remember, based off our Elliott wave count, this was wave 1. This was wave 3, this was 4, and then that was 5. So I would expect that we would bounce once we come back down here onto support of our wave 4 structure, because generally that's an area where there is a decent amount of liquidity. This does look like that would be the end to our short-term correction, and I would expect at least some type of a bounce. And that bounce could easily take us back into contact with the top of this wave 3 high. And so I do believe that this is going to be a pretty choppy period nonetheless, but I don't believe that after that move happens that this is going to be over by any stretch of the woods. What it looks like to me is we'd most likely be completing some type of A, B, and then I would still expect that we get a deeper C wave decline right down in here. That's just what makes the most sense to me based off of what the market structure is telling us. It looks like we're going to get 5 waves down. After that 5 wave, we would expect to see some type of ABC correction and a bounce to the upside. After that is where we'd expect to see one more final drop into our wave C, which is basically going to be taking us back down to this entire support cluster all the way back down in here. That's pretty much what I'm watching for. The question is, how deep is this wave C going to go? We know that based off of our Fibonacci that we would be expecting at least a move down to about the low $19,000s, $19,200 approximately. So really anywhere within this box is going to be a pretty good area to target. I would say originally the best place to start would probably be down here at the 0.5. It's not a bad idea to grab some bids down here, place some bids, and just simply look to accumulate, because oftentimes, you know, what we often do to ourselves is we get too overconfident thinking that we're going to nail the exact bottom or sell the exact top, when that's never what we actually end up doing. Very rarely are you going to be that guy that nails the exact top or nails the exact bottom, and what we should focus on doing is simply look to capture the majority of the move. Now that the market is starting to break down, it's starting to show more weakness. We've got rejected off of these wave 3 highs a couple different times now. To me, it's looking like we're getting ready to spill over to about $21,500. And after that move, you know, I do expect that we're going to get a little bit of momentum, and we talked about that in my last video. And if we come over here and actually take a look at Polkadot, in my opinion, this is a pretty good example. We're going to remove our resistance over here, and we're going to focus on the 618 support. But this is pretty much in that same boat, where we got 5 waves up, and we're expecting to see some type of corrective wave back down to the 618. Now, the thing with this is it looks like we're going to retest down here at about this 0.5 region, and then we'll probably end up getting a little bit of a relief bounce. And I do believe that that relief bounce will take us back up to the highs of wave 3. And after that point, we would still still expect to see a larger wave C decline that would take us back down to the 618 fib. And so that's literally what I'm going to be watching over here with Bitcoin as well. The only problem with Bitcoin is it hasn't got that final drop to take us back down to the wave 4 support. And I do believe that once we actually break below this current support inside of this trend, inside of this channel that we're in right now, we're going to get a quick spill back down to that level. And so once that happens, you know, there's still plenty of people that are expecting more upside. There's still a lot of people that are looking at that. And so I do believe that we'll see a short-term relief bounce. You know, the relief bounce doesn't have to go all the way to the top of the wave 3 highs, but a bigger bounce nonetheless, at least back up into the prior consolidation of pretty much where we're at today, is what I would expect before getting that larger move to the downside. Overall, I think that we should be expecting the bottom of this corrective move to be taking us somewhere around the end of March to sometime into maybe even the end of April. It's hard to say exactly. We don't know the exact times that it's going to take, but I would say that around the end of March, sometime in April, will most likely end up being the bottom of that correction. And so this is what I'm watching from Bitcoin in the shorter time frames. If we remove some of these drawing tools in here, let's take a look at what is actually forming on a larger scale, which if we zoom out here, the way that I kind of think that the market structure is going to take is, if we get to a bigger time frame, let's go to a weekly. Let's look at Bitcoin on the weekly, because one of the things that I was telling me that we're most likely at a topping point already is the fact when we come down here and look at our momentum indicators, the RSI, in my opinion, is not the greatest momentum indicator to use, although it is one of the most common. Everybody seems to use this, but for me, I find it much more relatable if I compare it with the OBV. The OBV gives better signals, it's a little bit more direct, and the RSI can actually stay overbought or oversold for long given periods of time. The only problem with the RSI is the fact that you're going to get mixed signals. Sometimes you can continue to see this market pull back and make lower lows and lower highs as the price is going up, and that was what we actually saw over here inside of our bull market for a long period of time. We actually saw, technically the RSI topped right here, and then we started to see this downtrend that was taking place, and that was all the way over here. So we saw multiple different highs, and it was giving us mixed signals throughout that period. So it's not the greatest indicator to use by itself, but when we compare it to the OBV, we get a lot stronger confirmation. And most recently, we saw a higher high in price, and yet none of the momentum indicators broke out. The RSI has made a double top, basically, and the OBV has made a lower high. And so because the OBV is giving me a lower high and the RSI wasn't able to break out either, I do believe that this is going to end up getting exhausted and we're going to come down. And it makes sense that these indicators would be telling us this, because if we look at the price, we already had 5 waves up. Inside of wave 5, which is what you're going to see at the top of an Elliott wave cycle, it would make sense that that would also flash our momentum indicators telling us that the short-term trend is exhausted. So with that being said, I am expecting that we're going to come back down to this green level. And if we look at what that will actually end up forming on a bigger time frame, let's assume we get back down to this level. We might bounce a little bit. But overall, we're going to expect to come back down into contact with this green level around the 618. And if we're looking at this based off of a charting pattern principle, what it looks like to me is that we would have a pretty clean inverse head and shoulder formation that could be forming. And this is just the most accurate way that I see the market going. I mean, either way, no matter what the short term takes, I do believe that we're going to come back down and retest this green level. And if we come back down and retest this green level, it's going to set up in a type of way that looks just like a inverse head and shoulder, which is a reversal pattern. And if we're looking at this as a reversal pattern, the way that you would measure this out for targets is you take the top of the range, the shoulder, or I should say the neckline, of the head and shoulder formation, and the more symmetrical that these line up, the more accurate the pattern. And because we're on a weekly time frame, because it's a bigger, more expansive pattern, that also gives it more validity, right? And so if that's what we're looking at, the way that you would measure a target is from the top of the neckline down to the bottom of the head, and then you would basically just move this to the top on the other side, and then that would be giving us a target of about $35,500, which if I come over here and draw a line, it'd be about right here. And so that next breakout that we would expect to see somewhere, around April, I would say, sometime in April is where I think that we'd end up bottoming. We would expect to see a pretty decent breakout. Once we could actually clear the neckline, then I think it's going to be a pretty quick impulse upwards of this region. And here's the thing, guys, because this first impulse down here was our first 1, 2, 3, 4, and 5 Elliott wave, that means that this entire first move is just a one wave, right? There's always 3 impulse waves for every wave. This was our first 3 set of impulse waves. That completed wave 1. We're working on the corrective sequence. That'll give us wave 2. And then what'll follow after is a wave 3 impulse, wave 4 correction, and then we still have a whole nother wave 5 to go. And so if we're looking at this based off of Elliott wave theory rules, what we'd be looking at here, if we were trying to measure out how high this wave 2, or how high the wave 3 should go, I should say, we'd be looking at almost exactly the same distance to the neckline, because we need to see inside of a wave 3 that it hits at least the 1618, because that would resemble that it's at least the same size as the last impulse. Wave 3s cannot be smaller than a wave 1, and so you have to go to at least the 1618. They can be the same size, but the wave 3 can't be smaller. And so it makes sense to me that the very beginning, that the threshold for our wave 3 would be hitting at the same exact target for our neckline of the inverse head and shoulder. So what that tells me is that we could actually overextend past the 618, because like I said, this is a wave 3. Wave 3s have to be at least the same size as wave 1. They cannot be smaller. So inside of a wave 3, oftentimes they are actually bigger than wave 1. Oftentimes they can be a little bit more overextended, because in a wave 3, that's generally where the most volume comes in. It's generally the most impulsive wave that exists based off of Elliott wave theory. And so, we could literally see a move all the way upwards of, somewhere in between the 2618 and the 1618, and this thing could all the way go up to the 2618 and make it double the size of wave 1, which is generally what we're going to see. I mean, if we got in here to the shorter time frames of just our most recent impulse, it makes a lot of sense, because you guys can actually be able to see those Elliott waves, a little bit easier. See, this is a wave 1. It's a wave 2, and then this was a wave 3, right? So wave 3s are oftentimes a lot bigger, and then wave 5 is sometimes about the same size as wave 1, generally based off Elliott wave theory rules, although it can differ. And so if we're looking at this on a bigger time frame, this being our first impulse, this next impulse could get overextended, and we could literally see this thing rally all the way upwards of about mid $40,000s to even $50,000. We don't know 100%, but what we can know based off of a general rule that Elliott wave gives us, and also charting principles being an inverse head and shoulder, we know that our target would be at least 35,000 and a half, because that would make the wave 3 the same size as our first wave, and then it would also coincide perfectly with our neckline target. So this is what I'm watching out for with Bitcoin, guys. I think that this next dip is going to be a truly amazing opportunity to be getting in for anybody that's taking profits, for anybody that looks to just want to dump more cash into the market. I don't think you're going to find a better opportunity, because you're going to have a ton of people claiming that we're going to go to lower lows. Those people never end up buying, but once we actually end up holding support and get this massive support and resistance flip, the next impulse coming is going to be pretty parabolic, at least in the short term. This year is going to be very profitable for those that are prepared, and this next dip is going to be a huge opportunity to get more prepared for that long-term trend. Now, next up on the list is going to be Ethereum, and Ethereum's pretty much in the same boat, although it just had a weaker 5-wave impulse. This thing barely broke out, but when I look at this, it looks the same as Bitcoin. It looks like we just finished an ABC up, and it's looking like this is most likely going to resolve into an impulse back down to the wave 4 lows at about, this one's going to be about $15,000. But regardless, with Ethereum, you're looking at still a pretty sizable drop nonetheless. If we're looking at Ethereum here from the top to the bottom, the 618 is going to be taking us all the way back down to about $1,330, which is going to be pretty much dead in the middle of this. Oops, wrong one. Which is going to be pretty much dead in the middle of this entire consolidation here. And so that's where we would be watching for. I would say, somewhere right around here, to just be a little bit more precise, straight in the middle of this prior consolidation leading into the FTX collapse. But the thing about Ethereum, guys, is the fact that it held better support. Bitcoin made a lower low. Ethereum made a higher high. So regardless, I don't think that this is anything to worry too much about. Even if this ends up underperforming and outperforming Bitcoin to the downside, is what I really meant to get at that point. But what we're going to be looking at here is most likely just a retest of this prior trend. We'd correct back down even if we see a bounce. I still expect that we're going to get 5 impulse waves back down to the 618. And the 618 is going to be taking us right into contact with this main trend line that, in my opinion, is going to be the early foundation for this coming cycle. And so, from where we're at today, all the way back down to the 618 would be a pretty sizable drop. you're looking at about 18%. And so if Ethereum, being a high cap crypto, the number 2 is going to drop 18%, a lot of altcoins are going to drop 30-40% as well. And so that's just something to keep in note. That's just something to keep in mind of. Understand that we are most likely expecting to see a pretty decent correction on the way back down. And if you've made profit, Ethereum is still sitting pretty close to these range highs. By taking some profit now, you're not really missing out on a whole lot, but you do have, the potential of a 15 to 20% dip on the way back down to look to compound more of that gain. I understand not wanting to risk it too much because this is just the early part of the cycle, but I am expecting a correction back down, so I think that it's at least smart to talk about this. Now, guys, to wrap up this video, let's talk about the final crypto on today's list, which is going to be Hex. Now, Hex is one that has performed exceptionally well, and if you guys remember, if you follow me on Twitter, if not, go ahead and follow me. I actually talked about this, and I ended up buying this when it was at this low point inside of its Wave 2 correction. And the reason I ended up buying this was because I saw so many people that were angry at the creator, Richard Hart. There was a lot of people that were really upset at him, saying all of this FUD, saying that he's a scammer and all of this, but instead of it just being the normal crypto community, which always hates Richard Hart, this was the Hex community that was angry at him. And so they were making all these different things, making these big threads about him, saying that he was, this and that. And when I saw how angry everybody was, I instantly knew that this was a very early part of an impulse, and most likely that this was going to break out. I mean, the reason I knew that this was an impulse is because we had clear Elliott waves, we had a perfect correction onto Wave 2, and then that's where I ended up putting $7,500 worth into it. And I drew this chart because I knew that it was about to break out in a big way. And if we come over here and actually look at the Hex chart, it's basically did exactly what I thought it would. And so if you guys are wondering, I bought down in here, it was about 0.24 cents. And so as it stands right now, from where I ended up buying to where it's at today, it's up about 2x, but I ended up selling up here at the top yesterday. And so if you're wondering, I've had a lot of people asking me, how the heck are you trading Hex? A lot of people saw that I was buying it and accumulating it. And, I started accumulating this one over here, actually. My first buy was over here at about 33 or 3.5 cents approximately. And then it dipped for one more low. And then I bought another entry right here when I first started to see it impulse again. And so my average entry is, somewhere in between both of these, probably right around 3 cents. And so it's up currently about 2x or so from that point, and I sold it a little over 2x because I did take profits yesterday. I've had a lot of comments asking me, what I think about Hex, how am I trading this, and basically that's how I'm trading it. I drew this on Twitter quite a while ago that I was expecting a 5-wave impulse back up to the range highs, and from that point, that's exactly what we did, and we can see very clear Elliott waves in here, in the same way that we can with Bitcoin and the rest of the altcoins. We saw 1, 2, 3, 4, and then in my opinion, Wave 5 was yesterday when we just barely peaked above the range highs that we were at in August. And so this one's been one of the better performing altcoins. I mean, you don't normally see high cap cryptos worth multi-billions pulling a quick 2.5x, even 3x off of the exact low that we were at. And, the reason I ended up personally buying more was just because I saw so many negative people, which perfectly coincides with the emotional psychology of a market cycle. I oftentimes talk to you guys about market cycles. We look at the Wall Street cheat sheet. We looked at the Wall Street cheat sheet yesterday, and I always talk about it because it's a perfect example of how to actually map out those emotions. And when we're looking at this, in my opinion, Hex just entered a new paradigm inside of its cycle, where we were basically in here. Capitulation, anger, depression. Capitulation, anger, depression. That was that entire consolidation. And so my first buys went underwater for about 40% loss actually from where I first bought over here. But once I started to see the new impulse forming, that's when I was okay with actually buying a little more, because I knew that most likely this thing was going to end up breaking out and making its first impulse into the new cycle, which ultimately takes us to the disbelief phase. And that's where I believe that we're at right now. Now, I'll be honest, guys, I do believe that we're at a topping point. Even if this manages to get one more little high, I don't care. I already took my profits, and so if you're wondering, if you should take profits, I can't tell you what you should do, but I will tell you that yesterday I took profits after both of my buy orders from basically an average entry of 3 cents, let's just call it. And so now I've taken my profits. I am expecting that this thing's going to pull back pretty hard when the rest of the market pulls back as well. But it won't change anything. If we're looking at this based off of, the way that the market structure looks itself, this to me just looks like we've just entered the disbelief phase. And when we get this pullback, like I believe we will, something like this will come all the way back down to, let's pull up where the 618 would be so that you guys can look a little bit easier. If we get down in here a little bit, the 618 is going to be taking us to about 4 cents. But to be honest, I wouldn't be surprised if this thing drops all the way back down to this entire prior consolidation, which was just previous support, and that'll be all the way down here at the 786. And so I really won't be surprised to see HEX drop all the way back down to that level. And if that's the case, I made 2.5x on the way up, or about 2x approximately with my average entry. And so on the way back down, I would be looking to buy that dip for sure. I think that would be a good opportunity, considering it would basically erase the entire first pump. And that's why I say, guys, even if we only hit the 618, that's still a massive drop from where we're at today. I think you're better off locking up some profits, because that's a 45% drop just to the 618. If we come all the way back down and retest prior support, that's like almost 60%. And so I want you guys to just be aware of that. If you're somebody that made some good profit, you followed me on Twitter and saw when I posted that, there's a lot of HEX people that saw when I put my $7,500 position into it, and a lot of them followed me. So if you've kept following me over the course of this time, I see comments all the time on YouTube asking me, how am I trading HEX? What do I think about it? And this is what I think about it. I believe that we're at a top. I believe that we're about to start a deeper correction back down, and out of the whole market, this one's probably going to have one of the gnarlier pullbacks when compared to other altcoins. Like I said with Ethereum, it's looking like a 20% drop, maybe even 18%, whereas HEX is like a 45, 50, potentially even 60% drop. And so, in my opinion, because it pumped the hardest, it's going to fall the hardest, and that's just the way all altcoins are. The bigger the rise, the harder they fall, and that's going to be the case on every single altcoin that we see. The fact is, guys, this one, although it is a high cap, it pumped one of the hardest moves off of the lows, which is a very bullish sign nonetheless. It tells me that there's a lot of buy support, which is the whole reason why I bought it down here to begin with, because I did believe that it was going to break out in a big way. Now that it's broken out, we've already got our 5-wave impulse off the lows. I think we're going to be in for a deep correction, and everybody's going to be talking crap on Richard Hart again, because we'll be in this disbelief phase where they'll pull out some magic excuse saying that, oh, you keep delaying pulse chain, or you keep delaying this, and you say this and that, and now all of a sudden it's still not here. They're going to be angry because it's just around the price that they're angry. Everybody got really happy when the market started breaking out. Nobody was angry at Richard Hart anymore. Everybody started telling me that I'm not taking profits on this because pulse chain is so close to getting released. And I'm telling you guys right now, if you don't take profits, you're going to watch this thing break down. You're going to watch it sell off, retrace the entirety of the pump it just had, and then pulse chain still won't be released, and you'll be sitting there thinking, man, I could have compounded so much more HEX right before pulse chain had I have taken profits, but I got too greedy thinking that pulse chain was just going to magically save me. I see a lot of people doing that, and it's no disrespect. If your plan is to hold long term, you've been long holding HEX forever, by all means continue to do that. But I'm here as somebody who's been through these cycles enough to understand when a market's most likely topped. I really believe that the markets are topped, and when this dip comes, you make way more money by compounding into more HEX, even if you have to pay the short-term capital gains. I see other people making the excuse, well, by the time you take your profits, then you still end up making the same as you would had you have just held long-term because of short-term capital gains, which is not true at all. If you bought down in here, and then you take your profit, you made 2.5x, whatever that is, you're only getting taxed 30% of the gain, not the whole position. Whereas if the whole position pulls back 45%, you're losing way more doing that than you are simply taking some short-term profits. I'm telling you guys right now, whoever thinks about this stuff doesn't understand basic math, and that's coming from a person who literally hasn't passed a math class since the 8th grade. But it doesn't work like that. The numbers don't line up. You're still better off taking profits on a short-term position, risking the short-term capital gains tax, because you're still able to keep profit, you're still able to keep that same position, and you're still able to compound on the dip ahead. So it's not like it's a bad thing, and whoever tells you guys that type of stuff just doesn't understand trading, doesn't understand investing. And I'm telling you guys, if you're looking at a 45% drop that's on their way, wouldn't you just rather take a little bit of profit? I mean, it's not going to kill you by any means. You only have to give up 30% of the profit versus what you're going to be able to gain on a 45% drop compounding. It's just massive. But regardless, guys, what we're looking at big picture is this disbelief phase. And so what I think that's going to end up happening for HEX is, in the same way Bitcoin's going to drop, in the same way all the other ones are going to drop, I think we'll bounce off this level. And then, ultimately that'll set us in for the next breakout. And that next breakout, in my opinion, is going to be taking us all the way up here to about 20 cents at the top of this, lower high that we were at. I do believe that that's most likely where HEX is going to be headed. because what Hex has coming for it is a wave 3 impulse. And because of how big this wave 1 impulse was off the lows, assuming that we've already topped like I think we have, let's assume that we go back down to this 618 region, you know, we have to go to a minimum target of 13 cents, and I do believe that because of how impulsive this first one was, I honestly think that we're going to rally upwards of the 2618, which is basically going to be 20 cents, and that's kind of what I'm watching out for with Hex. And so, big picture, I think that this one's going to continue to perform really well. I don't really see anything or any reason why it won't. Because it made such a big impulse off of the lows, it leads me to believe that there's still plenty of buy support in this market. There's still a lot of people that care about it. I know that Hex is one of the biggest communities out there, whether you have all the people that talk crap on it. I don't care. I know Pulse Chain is going to be a big deal. I sacrificed for Pulse Chain. I think all of the other projects inside of the ecosystem are going to be very, very well off. Bullish to be getting into those at the ground floor because it's a whole new ecosystem that's going to spawn. There's going to be plenty of opportunities inside of it, even if, you know, the majority of them don't end up getting any type of mainstream adoption. There's enough adoption just inside little niches and little communities that you could still make life-changing gains off of a low-cap altcoin going 10, 20x, because it doesn't really take that many people to be buying something to get it to go to those prices in crypto. So with that being said, this is the video I had for you. Wanted to summarize some thoughts. Wanted to give you guys an update on Hex. I made a good amount of profit. I've taken that profit, and I expect a pretty decent sized dip. So if you're watching wondering how I'm trading, that's how I'm trading it. If you guys want to be able to follow exacts, where I'm taking profits on all this stuff, where I plan to re-enter on all of these markets, how I'm dollar cost averaging, what NFT picks I'm buying, DeFi protocols, all of that type of stuff, anything that I'm doing with my money. Another thing is like, you know, seed funding opportunities, IDOs and things like that. If you guys want to be able to get access to some of those pre-sales, those are some of the better ways to make profit, and I never talk about those on YouTube until after they've already released. And so if you guys want to know how I'm diversifying, what I'm buying, what I'm selling, what I'm trading, and all of that stuff, links are in the description to go ahead and sign up on my website. I look forward to seeing you guys on there. Now is a great time more than ever before to do so. And with that being said, I love you guys. I'll catch you in the next one. As always, peace out.